I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and answer any questions you might have. For those of you who are new, I see some new names. Some of you just joined. So I appreciate you guys finding time and attending. Walter, Martin, thank you for signing up. I appreciate that. So we're going to talk about your membership. Some of you are not members. So we want to make sure that I can answer any questions you have about your subscription, or if you're trying to decide if you want to sign up for Yellow Tunnel services. I'm going to talk about current market conditions, what to expect going to the end of the year, and then what to expect beyond. This is my brief bio. So my background, I worked as an executive and CTO in several fintech startups here in Chicago. I have a master's degree in computer science, started in programming, building platforms for broker dealers, for hedge funds. Some of them went public. Options Express went public back in 2006. I decided I'm going to manage my own money. And I've been doing that since I started Options Express, actually. We were encouraged to trade. And then we were building tools. And then after I left Options Express, I worked with different hedge funds, broker dealers, started TradeSpoon and Yellow Tunnel. So I've been doing that for over 15 years, over 20 years. Mentoring and teaching subscribers how to trade stock and options. And in the past 2 years, we have Keith Harwood from Options Hotline who joined us. His background is he's a trader. He used to be on the floor, market maker. He worked at different hedge funds. So his experience is quantitative trading. So very complementary to my skills, and I'm really happy that we were able to join together. And we have live trading room every day, the first hour of the trading session and the last hour of trading session, which is also marked and included in your membership. So hopefully you can see the live trading room and join or watch the recording. I know some of you have jobs, full-time commitments, so then just watch the recording, whenever you have time. You can definitely skip through it and fast forward. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept in order to invest in current market conditions. So disclosures are very important. If this is the first time you see this slide, I encourage you to visit optionscreen.com so you can understand the risk associated trading stock and options. I'm not a financial advisor. I'm here to show you what I do in my own account, based on my own risk tolerance level for general education and information purposes only. So let's take a look at the current market conditions. First, let's look at Aggressive Power Trader. Some of you have membership to Aggressive Power Trader. Basically, this is the model that runs every day, and it's geared toward active trading, active short-term trading. It could be a day trading. You can hold position for a couple of days, maybe for a week, but that's the Aggressive Power Trader. Some of these signals I trade, some of them I don't. It's meant to help you with portfolio construction. You have 4 active positions at a time. That's what I'm encouraging you. If you start with 4 positions and don't risk more than 2.5% of account value per position. I think that is the most important tool. Not tool, but the most important part of your trading plan. So you have to have a trading plan. I would encourage you to do it in writing. If you don't have a trading plan, you can click on contact, schedule one-on-one consultation with Keith. He does do, first half an hour is free. Then if you want to build custom trading plan based on how much money you're managing, your risk tolerance level, what type of trading you're doing, then he can help you with that as well. But 4 positions, 2.5% of account value per position. And today we see some of the stocks like, despite market pullback today, airline LUV is still up. So it's finding stocks that can outperform its peers and can outperform a market. So QQQ is down 0.5%, and LUV is actually up. Or Marriott, right? Marriott, QQQ is down, and we'll just double check. These could be delayed. These are delayed quotes. So Marriott actually down 1% already. So in line. And then you have Deere, right? Deere looks like it's pulling back more. But also, let's see how well is Deere doing. Deere is actually outperforming, in line with QQQ pullback, similar to SPX. So these are the signals for today. Then in terms of spiders, we're looking for direction. What will happen to the end of the year and beyond? We had 25 basis rate cut last week, right? Kind of mixed information. On one hand, Powell was optimistic about state of the economy, the wage growth, the unemployment data, the inflation data, but he only penciled one interest rate cut for next year, which is, the street expected 2 to 3. And then the committee itself was pretty divided, very, broad range of different opinions like we haven't seen in many years, right? So that basically creates uncertainty about the path of interest rates. And obviously interest rates are input into almost all the models that run, equity and bond market, right? So, people are adjusting. And then today we have unemployment data, same thing, right? Looks like more jobs created than expected. But unemployment rate, the expectation was 4.5% for this year. Powell mentioned, 4.2 to 4.4 interest rate next year, and it came in as 4.6, right? So everybody has to adjust to this new data. Model before before the December 1st, the long-term predictions get updated once a month. So the 1 month, 2 months, 3 months, it basically sees that the path of least resistance is higher highs and higher lows for spiders, potentially reaching 700 December, October. That's what the model says. In the next 10 days, it thinks it's a little bit overbought, right? And it potentially can pull back to 674. This 10-day and today's prediction is posted every day, updated every day. And you can see today we're 679, not that far from 670, 674, which happens to be a 50-day moving average. So the model can give you a long-term perspective on this market, 10-day prediction. It gives you signals every day. If you want to leverage your account, you can buy options. So it suggests options that you can trade. And you also can see for any of these stocks I'm trading, you will see them in orders and positions. I don't trade all of these signals. And then you can go into AI analysis. And let's say you want to NVIDIA, right? Very popular stock, but what about NVIDIA? If I want to analyze NVIDIA, then you can type in an NVIDIA and it will also analyze NVIDIA and gives you predictions for NVIDIA as well. Let me see, I think I need to log in or something. Try it one more time. Yeah, okay. Need to log in. So, the NVIDIA shows you, okay, it's bullish, potentially could get to 180, not that far. But short term, it sees more pressure to the downside, right? Potentially 165 for the next 10 days to a month, right? And if you're buying today at 174 is the optimal entry point, that's the green line, and exiting at 179, right? So that's what the model sees, that short-term downward pressure, but long-term, the long-term trends is still intact, right? Long-term and medium-term in trend. So today, spiders are down after we're digested. Everybody's digesting the interest rate decision, unemployment data this morning, and it's kind of a setup where you have this triple top, right? We're trading in a box, right? Actually, from here, so we're trading in the box. So bulls want the market to break higher, and the market is overvalued, right? We are trading at historical evaluations. So bulls want the market to break to that 7,000, where a lot of positioning is at 7,000 level on SPX. Right, and we did break through the 6,800. And then on the downside, bears want to push it below October, November low. So you can see it's a very strong uptrend since April lows. But if the bulls don't have enough catalysts to push the market higher, then potentially, we'll see spiders is already testing 50-day moving average, and QQQ is testing important below 50-day moving average and testing important 600 level, right? We're within 1% of 600 level, and we've seen 600 level has been strong overhead resistance in October, November. We've been trading above that level, below that level. So it's important for the bulls to hold to the 600 level, because if they cannot, then it will open the door to retest of November and October lows around 585 level. So SPX testing 50-day moving average. If you look at the positioning, right? If you look at the positioning, trying to figure out, what's the main overhead resistance. Let's look at December, right? Let's look at December and January expiration. Okay, good. So you can see gamma flip point is at 6,800. We're right below that level, right? So 6,800, we're at 6,700. So there's a lot of positioning. Is between 6,700 and 6,800. We're trading right in the middle of this range. So the model basically, not the model, but this is demand and supply for options data, implied volatility. So based on the current implied volatility, on the downside, we're trading 6,600, right, by January expiration. Basically revisiting November, October lows. On the upside, it sees again that high position around 7,000 level. That's the highest concentration. Now the all-time high is around 6,900. So we'll do it this way. So one scenario, we break through the 7,000. The other scenario, we're unable to break through 7,000. I mean, we're already at 6,900, 6,950, close to these levels. So that's scenario number 2. We're trading in the range, right? That one standard deviation. And then scenario number 3, we're breaking below the November, October lows, right? And the next event is, we have CPI data on, I think tomorrow Thursday, we have CPI data this week, inflation data, which has been, going in the right direction, right? The long-term trends for inflation data is to continue going lower. You can see it in prices of the cars. You can see in rental prices, in gasoline prices. There is obviously inflation when you go to stores and try to buy products, but the major source of inflation is trending in the right direction. So you have 3 scenarios that you have to consider for December and January as we approach, and the next catalyst would be earnings season, January 15. We're trading in historical valuation. You already see reaction into Oracle earnings, Broadcom earnings. The pressure, the bar is raised high for the mega cap technology stocks to justify their investments into AI, right? And you can see a sharp pullback in Broadcom and Oracle. And we have Micron earnings tomorrow as well. So these positive negative rehearsal exercises are very important. I encourage you to do them because it can help you determine the position size, right? And how much risk you're willing to take, right? So most people are bullish on the market, right? Probability of recession is near 20%. Unemployment data is still stable. Inflation data is going in the right direction. Yeah, markets are overvalued, but AI is here, and you can see billions, trillions of dollars of investment into AI infrastructure. So scenario 1 is one scenario, right, where we're going to make new highs in January. Scenario number 2, we're still trading in this October-November range, right? So it'll be in October, November. Sometimes it takes like 3 to 4 months to break out of this range, right? So that's scenario number 2. And then scenario number 3, we're going lower, right? Break below the November, October lows. So why is this exercise important? Again, position size. I encourage you to go through these positive, negative rehearsal exercises. If you're a day trader, I guess you don't care about what's going to happen in January, then you do it for the duration of your trade, right? If you hold this position for day 2, then you do the same analysis, but range is much smaller, right? By the end of today, we're probably not going to break 6,700, right? And we're probably not going to break 6,900, right? So the range is much smaller, right? But whatever the time window you're analyzing or trading in, right, based on your trading plan, then that I encourage you to do this exercise. Because if you say scenario number one, well, how much money am I willing to risk? Well, I'm going to exit out if we break November, October lows, right? That means I need to get, instead of being right now, I'm market neutral, slightly bullish, but then I would have to be more bearish, right? If October, November lows are taken out. So how many of you say scenario number one, we're heading higher? How many of you say no, scenario number two, we're trading in the range? And then how many of you say scenario number three, we're going lower? Let's see. Martin, what do you think? Paula, Radmila, type in inside of the question. Walter. So just type inside of the questions if you think. Martin, 2. Walter, 2. 2. All right, thank you. So it looks like everybody said 2. Basically range bound going into January. I'm going to go with 1. I'm a little bit more bullish. I mean, obviously we are trading in this range, digesting the news. I don't think we're going to, from seasonality point of view, market should break out, right? I'm going to say 1. In December and or in January. The reason I don't think it's going to be 2 because I think it's either 1 or 3, right? It's either 1 or 3. I don't think it's 3 because unemployment is stable and earnings are strong and wages are still, year-to-date wages are still growing and in a healthy state. So I think the passive liquidity is to go 1. If 1 does not happen, I don't think we're going to stay in 2 too long, right? I think, more likely than not, then we're going to break below the November, December lows, right? Because everybody's, government shutdown, everybody was waiting for data. Now data arrives, people have to make a decision, right? Are we going lower or are we going higher? So I'm going to go with 1, but 2, 2 is definitely possible, right? It could be December. We're already approaching Christmas. Happy Hanukkah, everybody. Approaching Christmas. If you celebrate Christmas, Merry Christmas next week. So, yeah. So that's my take on the market. But again, if I say 1, how much money am I willing to risk per position? This is important level, right? SPX, I would watch, it's around 6550, right? 6600. If this level is taken out, then obviously it opens the door to 200-day moving average, which is somewhere between 6,200 and 6,000, right? So that would be definitely open. But first thing first, right? First thing first, we got to look at the market. So how do we help on yellow tunnel? So I already went over aggressive power trader. So you have on daily basis, you can consider option trading, right? You can consider stock trades. You can look at my orders. You can look at my positions if I have them, right? Right now, I don't have any positions in this. You can enter your phone number to get SMS messages. You can see history of all the signals. So you say, Vlad, what was the signal yesterday? Okay, CHRW, Emerson, some of the healthcare, JP Morgan. These are some of the stocks that are continue to trade in a strong direction. And this is an aggressive power trader from yesterday. What else is in there? Recordings, live trading room recordings. So you can watch every day. I encourage you, if you have a subscription, I encourage you either to participate live or watch the recording. Keith and I we watch recording every day. And you have these recordings. I encourage you to review them. And then what? And then AI analysis, right? We talked about that you can analyze optionable stocks, not all stocks, but S&P 500 stocks you can analyze here. Weekly power trader. Weekly power trader are longer term signals. So it gets published on Sunday, right? And it's a longer term model. the signal tries to make predictions for next 10 days, and you can hold it for a couple of weeks, you can hold it, for a month, but these are supposed to be stocks that are in long-term bullish trend that the model sees, right? So Citigroup is in strong uptrend, railroads are in strong uptrend, GE Vernova is in strong uptrend, Johnson and Johnson, Triple M, right, Newman Mining are all stocks that the model sees on Sunday that can potentially outperform the market. Obviously, today markets are down, so maybe Johnson and Johnson is also down today. So it looks like all the stocks are down. But the idea that these are strong performance, and now would be a buyer into pullback, right? Like Citigroup, CSI, railroads, they're all pulling back today from historical all-time highs, right? But still going in the right direction. So that's weekly power trader. Again, you can, if you want to leverage, maybe instead of Citigroup stock, you can buy option, right? You can see if I traded any of these stocks, you would see them in the orders. So I did trade GEV, right? I closed GEV, half of GEV position today. When dust settles, I'm probably gonna, unless I see more pressure to the downside, but potentially re-enter GEV. So that was a trade from today. I'm in the spread. So it's a combination of both stock and option trades, right? So I'm in 95, 100 call spread on NEM as well. So that's weekly power trader. Dynamic power trader is actual current portfolio that I have. These are a list of all the stocks that I own, right? I have Cisco, GEV, JetQ, JP Morgan. Some of them I try to do both. I try to do stock trading and option trade because we have subscribers that do both. So again, you can see under orders, it's a combination of stock and options trade. So I'm in Cisco, right? I think Cisco looks strong, especially on the pullback like this. I would consider buying, Cisco. GEV, right? So try to be diversified. Telecommunication, this is industrial stocks, this is metals and miners. I am hedging, right? I'm hedging because I was concerned that unemployment is going to come in worse than expected. Kind of came in, you could make a bull case, you can make a bear case, so it's kind of mixed mixture. But right now, market is using an excuse to sell off. So I do have a hedge, right? So I hedge. You can buy PSQ inverse ETF. You can buy inverse spiders. In this example, more often than not, I would either buy a put spread or sell call spread. So I did sell 630, 640 QQQ put spread with the idea that if we are retesting or breaking all-time highs, I'm going to lose money on the hedge, but the entire portfolio will go up. And in case the sell-off continues, then I can potentially hedge, and collect. So I collected $3 for 630, 640 call spread. The risk is $7. So you'll see example of both, option trades and stock trades, right? Like GEV. So that's dynamic power trader. Also earnings power trader. This is where very aggressive. This is the most aggressive service where I'm looking for these 50%, 100% returns overnight. And usually you can do it with the stock that have a strong momentum. Either there's some kind of news and you can predict the news, or there is an earnings event. So we have FedEx, we have Micron, Nike announcing earnings this week. So I think Micron, I will do Micron. The earnings are tomorrow after the close, I believe. So you will see it under orders. I would do spreads, right? I did Broadcom trade, Oracle trade. So every week I try to give an example of option spread. In the closing bell, if you watch the recording of the closing bells, right, on the trading room, then usually in my personal account, I do more than one, right? But I don't want to over trade. So that's the recordings. Any questions so far? All right, approaching all-time high. Tesla looks good. Tesla and Peltier. So Tesla, SpaceX is going public, right? Elon Musk approaching, on the journey to be first who has $1 trillion, right? Net wealth of $1 trillion. And Tesla kind of following him, right, or leading him. So Tesla so far is outperforming the market, right? QQQ is down, SPX is down, and Tesla is up, and it's been up. I would say it's approaching 500 level. So I assume there is a lot of overhead resistance on Tesla at the 500 level. So, I think you have some room to the upside, 500. Expiration. Oh. Yeah. So there is a lot of overhead resistance at 500 level. So this is something that I would keep an eye on, right? You can squeeze another 4 or 5%, but you can see any negative news, and Tesla from all-time high could reverse its course and kind of follow QQQ. So ideally, you want it to break through the 500 level first. But do keep in mind that, like I said, we are in the middle of expiration week. And a lot of today's volatility could be attributed, right? A lot of people say, well, why is market is down? Or why is market up like today or this week? The main reason is going to be expiration, right? Because, there's bullish case and bearish case could be made about interest rate decision and unemployment, but people are going to adjust in their position, right? If you look at the expiration, December expiration right now, most of the gamma and most of the position are in December, the Friday's expiration. In relative terms, January, much smaller contracts. So all these contracts will expire, and they basically open up the door. People will have to either sell more puts, right? A lot of institutions, they do these papered, what do you call it, notes, right? They sell puts and they, build notes, and they sell notes to wealthy, money management, wealth management. So these positions will be reestablished, right? And when they do, then that could be a bullish case where Tesla is going to break through 500 level, or it could be bearish case where Tesla is unable to break through all-time highs and rolls over. Peltier, Marty, Peltier is very similar. Well, actually, it's not at all-time high. It's kind of falling behind, but it's signing the contracts. Right, there's a momentum. They don't have to build data centers. They basically sign contracts with government and provide, AI, infrastructure and solution. So the stock is up on a down day. These are the stocks you want to own. Obviously, you can argue same thing, that it's triple top, and it's a very, considered to be a bearish position. So I think it's still the Tesla and Peltier will follow SPX. The only way SPX can break out of the 7,000 range, if the mega cap technology reverse its pullback, you can probably argue even Bitcoin, right? The risk on asset classes have to, because you can see value stocks are actually underperforming, right? They're already overbought and they're rolling over, right? The small caps rolling over. The value stocks are rolling over because they're overbought, and technology, not at oversold levels, but pull back. So we have to break to the upside. right? And if we don't break to the upside, most likely we're going to break to the downside. Right? And Pelletier is also in that boat. Short term, yes, it's outperforming, but we're going into the earnings season, and the market has to make all-time highs. So I'm inclined, here, I mean, you can squeeze a little bit, right? But risk versus reward, you just have to be careful, right? There was a famous saying, I like this. Sometimes you have to be a price taker, and sometimes, you have to, pay the price and take the price. I forgot. But the idea is that sometimes you have to pay the price for the momentum stocks, whatever that is, right? So in this market condition, I'm usually want the price to taker, where I want the price to come to me when I see oversold situation, right? I mean, if Pelletier goes to 160 and markets are still above that November, October lows, there'll be a much better setup. And if you look at Pelletier, I assume there's a lot of overhead resistance at 200 level. Kind of large open interest, yeah. So largest open interest, largest call wall, at 200. Gamma flip at 172 and put wall is 180. So highest concentration is 180. It's in positive gamma flip 172. 200 is overhead resistance. So ideally, I want to buy it at once. What did it say? 170? 180. Sorry, 180. So ideally, I want to buy it either 180, right at 20 moving average. I mean, I prefer to do it at 160, but that would be my point, right? And at 200, or you wait for it to break through all-time highs above 200. So that would be the analysis of Pelletier. And what is model things? Let's see. Doesn't matter what I mean, it doesn't matter what I think, but let's see. Tesla. So it's overbought, right? It's already at 4. Model C's basically based on the 10-day trend, it can get to 487,500. But if you zoom out and look at the long term, it's way ahead of itself, right? These past couple of weeks, on SpaceX news, and that Ford is closing their EV business, or some of the EV cars. They're obviously giving a boost to Tesla. But the short-term trend, the 10-day trend, is way above its longer-term trend, and I would be careful with Tesla. Pelletier. Pelletier, on the other hand, 10-day trend is 195. That's 200. Potentially could pull back to 180, right? That would be a better entry point. 177, 180. But long-term, it sees a strong uptrend, and will continue to go higher. So if I have to choose between Tesla and Pelletier, I would go with Pelletier. Let's go to Grok. I got my super Grok. Let's ask him, which is a better trade if my time horizon? You have to ask about time horizon, right? Because that is important. Which is a high success trade if my time expectations gain. Tesla versus Pelletier. This is a pretty smart guy, so let's see what he says. And while it's waiting, let's ask this guy too. So Avantgarde, you probably got emails. We have marketing relationship with Avantgarde. They also have AI, optimized for financial conditions, broker dealers. So let's see. So Mr. Grok says, Tesla buy would mean 391, 80% downside like in the recent run up. Okay, kind of what the model sees. Thought you gets to hold one in flatline candlesticks. Earnings reports. Robotaxi gives us better short-term tailwinds, even at high stock, and keep running on it. Overall, compared tips. Short-term probability in Tesla favor for positive return by end of January. This isn't guarantee earnings. If you trade this option-based, consider implied volatility around the Tesla earnings for potential new shape. Okay, so this guy likes Tesla. I like Pelletier. Great question. Pelletier, Tesla, recent momentum, long-term option. Growth prospect expansion. Analyst sentiment mixed, bullish on Pelletier. Okay, valuations, poor value metrics, high valuation but justified by growth. This means for priorities. Both stocks are riding the AI wave and have strong momentum. Pelletier currently shows higher growth and momentum scores. Ownership and earnings surprises. Tesla faces more near-term headwinds. Based on the current growth momentum, Pelletier appears to have a higher probability of outperforming. I'm going to go with Winston. For the reasons outlined here, right? Valuations concerns, right? Overhead resistance, and I'm more of a momentum trader, right? So if I see the momentum and growth, then I would go with those metrics. So Martin, let's take this. Try to be here by end of January, right? And remind me, and we want to see if Pelletier or Tesla will outperform into January. Any other questions? So earnings power trader, again, you can sign up if you don't have a subscription. You can sign up for Avantgarde trading. There's no minimum deposit, but if you deposit money, we will waive 3 months. And you sign up for any of these membership, we will refund you the first 3 months of membership. So you basically get 3 months free of any of these services, plus you have access to Winston and trading platform, right? And you can analyze some of these trades like Pelletier, right? To look at the open interest and kind of see, okay, what is it thinks 200 is overhead resistance? Well, because the open interest is highest, right, in the 200 strike in December, and if I go to January, 200 strike, highest interest is 200. When a lot of people are positions at 200, you need some catalyst. It could be earnings, right? But something to break above that. And if earnings are not good enough, like we've seen in Oracle or Broadcom, then if you can't go higher, then it means you usually go lower. Any other questions? All right. So in the live trading room, if you haven't been there, I cover a lot of dichotomy of control. The idea is that try not to predict the reaction of market participants into the unemployment data or CPI data this week. Concentrate on things that are within your control. Martin, yes, thank you. I know you have subscription to Yelp. I just signed up, so I really appreciate it. So welcome to the neighborhood. Positive, negative visualization, right? You can look at the positive and negative visualization to help you determine what that position size is. We went through that exercise. It's very important. The most important is to have a trading plan. If you don't have a trading plan, if you haven't traded before and have a solid written trading plan, just consider you can click on contact us and schedule consultation with Keith. First half an hour is free. Basically can really, there's no risk. What's going on today? Potentially he can help you, build the trading plan. If you have, commitment with time, commitment with money, then we can also do coaching and help you build that trading plan. But the first half an hour, just talk to him and he can help you build that trading plan. You want to avoid fight or flight response. You don't want to trade based on emotions. That's why I always advocate 4 positions, no more than 2.5% of your account portfolio exposure per position, because this way, you know that the most you can risk is 10% of your portfolio. If your portfolio drops 20%, right? If QQQ is down, I don't know, 4 or 5%, and your portfolio is down 10%, once you reach 20%, this is where majority of the people make decisions based on emotions, right? That adrenaline, fear, your blood pressure goes up. You want to avoid that. How do you avoid that? The only way I learn is get the position size correctly, number of positions, and look at these rules and basically write them down. And if you look at Pelletier, you can be long, but you can say, okay, I'm long 160. I'm long as long as the Pelletier is above 160. But if it drops 160, or you can say 140, I'm out, right? So you may be 40, 50 points to the downside, pretty volatile stock, and 50 points to the upside, right? But you pick that line, right, in the sand, and if that line is breached and you're down more than 2.5% of your portfolio, then you exit the position, right? So prospect theory, one of the homework is just read on prospect theory. I mean, most of us maybe understand this intuitively, but this is what drives our market decisions, right? And Daniel Kahneman and Amos Tversky, they got Nobel Prize for the financial behavioral finance, and a lot of our training is just explained in this chart, right? There's asymmetrical relationship between our gains and losses, right? Pain from $100 is much greater than the pleasure from gaining $100. Once you realize that we are wired differently, and $100 loss, first of all, $100 for different people feels different, right? Because we manage different amount of money, and that trigger point, right? That trigger point, I don't know what that is. It could be $200, it could be $1,000, just depends on where you are. And then once you have that amount of money, that your loss of that money and your gain feels completely different. So if this concept is new to you, right? A lot of people say let your losses short and let the winners, ride. Well, this is great in theory, right? This is great in theory, but in practice, it takes a lot of self-awareness, EQ, right? Emotional intelligence. So this is a great book to read, right? I would read up on prospect theory. I would read this book, and if you're serious about investing, this will help you analyze your own decisions and how you make, money, and how you trade in general. All right, so then you got your homework. I went through all the training plans, and that's all. I'm gonna be traveling next week, so Merry Christmas if you're celebrating Christmas. Happy Hanukkah if you're celebrating Hanukkah. We still have live trading room, but there won't be a strategy roundtable next Tuesday because I'm traveling. But there will be the following Tuesday, right before the year end. So let's try to pencil in same time, 2 weeks from now. It'll be end of the year. And remind me, Martin, remind me, if Pelletier outperformed, or at least is outperforming Tesla, right? And see if the market is able to make new all-time highs, or if it's fallen apart. So far, it's kind of a 6,800, right? 6,800 has been a lot of position in 6,800, right? So we touched basically 6760, the gap and this gap. So important level. if we break through this number, if we make new lows either by end of today or by end of Friday, right? It's Tuesday, we still have a few days. Then you could have a retest of the lows. All right, that's all I have for today. Thank you very much, and have a great day. Martin, I mean, we have all these three. I don't remember what you signed up for, but I can look it up. I have it here. You signed up for. Let me see what it is. Sorry, you're on different emails, so yeah, I don't remember. Seven zero. Oh no, I think you do sign up for everything. Hold on, I stand corrected. Sorry, you have Platinum Power Trader. So Martin, okay, you have everything. So you should have access to all these services. Yeah. So Martin, you should be able to see all of these services. Aggressive weekly dynamic earnings power. Paid is separate. This is Keith manages paid. You can talk to him about that, but most of the trades are happening in these 5 services. All right, thank you very much. Have a great day, and I will see you guys hopefully in live trading room. So still live trading room this week, but if not, then 2 weeks from now on Tuesday, same time, we'll talk about Tesla and Palantir. Thank you very much, and have a great day.